What's up, everyone? The stock market tanked down in a major way yet again, and the craziness is only getting started. Normally, the month of December is pretty awesome for the stock market, but it's definitely not looking that way over the past week and a half or so. In this video, we're going to talk about what is going on in the stock market right now, the most important things you need to know about, and towards the end of the video, we have nearly a $2 million big money trade from today, so make sure to stick with us for that. But Tom, let's get right into it and what's going on in this crazy market.
Yeah, it was another rough day in the stock market, and I didn't really see anything stick out necessarily that made us drop down early on this morning or anything like that. But you can just see that pretty much all the bigger tech stocks across the board, whether it be Microsoft, Google, Apple, Meta, Amazon, Tesla actually held up a lot better than most today, but actually ended up down in the red. But you can just tell there was a lot of red across most sectors here in the market, and the SPY ended up sinking down, Mike, and we actually fell below 380, which was a huge support that we talked about in last night's video. The fact that we're falling below 380, Mike, is terrible in my opinion, and I do feel like that maybe the market can keep going down. But what I will say is that, like you said, for the past 5 trading days, we've pretty much been moving directly back to the downside. So I will say we do have a little bit of data coming out tomorrow morning. If we look at the economic calendar, there is going to be some housing starts 1 hour before market open, along with some building permit numbers. So maybe this can help the market pop back up above 380 tomorrow, and then maybe we can start to push back up towards maybe like 382, then 385. But I will say, Mike, another bloody day, down 0.85% on the SPY, and I'll be honest, the QQQ, it looked a lot worse even today.
No doubt. So one of the stocks that have been like leading the QQQ lower and just the market overall is Tesla. Tesla is one of like the worst performing stocks of December so far, but you just said a couple minutes ago that Tesla actually held up a little bit better than most market moving big tech stocks today. Why is that?
Yeah, they actually held up a lot better. And guys, this is actually pretty insane, but Elon actually put out a big poll and said that he will be stepping down as the CEO of Twitter. Now, this is not exactly confirmed. He hasn't said that he exactly will yet, but he did say that he'll abide by the results of the poll. And you can see here there was 17.5 million votes on this, and 57.5% of the voters voted that he should step down. Now, I will say, I don't think that this is going to be too bad for Elon himself. I know that he actually said that he would step down from Twitter eventually. So I guess sooner rather than later might actually be a good thing. I'm not sure. But nonetheless, this actually did help Tesla kind of pop up this morning. You can see Tesla gapped up a little bit. And then even towards the end or middle to end of the day, Tesla had a pretty good move back to the upside. So I thought that was interesting. They only closed down negative 0.24% on a day where Amazon, for example, was down like 3.35%. And even Apple had a huge drop to the downside, falling down around 1.59.
Exactly. So a lot of people are looking at this Tesla and Elon Musk Twitter situation as a good thing for Tesla because Elon, if he steps down from the head of Twitter, he will have more time to dedicate towards Tesla and, making Tesla all that it can be. So that's the theory behind it. But to be clear and fair, at the same time, Tesla stock has been pretty oversold. It took such a hard beating so far in December where it's like when you fall so much, there comes a point where it's like you eventually start to pop back up. So I feel like there's multiple things like working all at once with Tesla stock right now. Of course, the Twitter news with Elon potentially stepping down is good for Tesla stock, but I also think it was a little bit oversold to begin with.
Yeah, exactly. It's very oversold. And actually, there's a big support that I've plotted here around $140. And we got within around like $5 or $6 of that recently. So I'm going to really be watching Tesla. If we do see a bit of a support bounce, it might be a decent little play back to the upside. I know a lot of people have been eyeing up this dip, and I definitely have been as well. Now, I know a lot of people might be looking at it for the longer term. I might just look at like a shorter term play back to the upside, but still, I think that this is pretty big, and we're still kind of hovering right around $150 today, which a lot of people thought that was going to end up being a big support as well. So hopefully we get that move back up. It would be pretty awesome over the next couple days. And hopefully we get some more big news. I know that poll came out. Maybe Elon will make a big announcement or something like that over the next couple days, and maybe that'll make Tesla go even more crazier.
Yeah, we'll see. So, Tom, I was looking at something very interesting today, and this has to do with the big tech stocks, and more specifically, it has to do with Amazon. So, Amazon was one of the big tech stocks that really led the market down today as it closed 3.3% in the red. But, Tom, I need you to go on a daily chart right now, and we're going like 3 years back. So we can see that on a split adjusted basis, Amazon stock right now is trading for around $85 per share. Amazon stock has not traded at this level since like the lows of March of 2020 during that giant COVID crash. So it's crazy to think that, when the stock market was getting obliterated during COVID, Amazon and many, many other stocks are at their same exact levels. Just a couple years ago, and I guess you'd say a year and a half ago, Amazon stock was trading for, over double its current price by a good amount. It was trading for highs of like $189 a share. So it just goes to show you how much of a wild ride we saw this year. But it also goes to show you that, maybe you should consider buying the dip with some of these quality companies that are at good valuations before the opportunity goes away.
Yeah, exactly. It's always very scary to buy in, especially whenever stocks are going down. And I know Amazon, it looks very scary right now, making new lows of the year. But I will say, Mike, I really recommend like dollar cost averaging in. For example, if you have $1,000 that you might want to put into Amazon, I would recommend starting out with maybe $100 this week, maybe $100 next week, and then just keep doing that as Amazon or as the market and time advances. And I think you'll end up getting in at a pretty good price. But right now, Mike, it does seem pretty scary. They're breaking that yearly low, but I know there's a lot of huge quotes out there from Warren Buffett and people like that. Buying at peak fear is one of the better times to buy most stocks. So I think that's a really good quote. And I feel like that, obviously it seems like almost all of the, I guess, like stock gurus out there have a quote kind of like that.
Yeah, exactly. I mean, at the end of the day, if you're buying a quality company when everyone else is panic selling, over the long term, you should do pretty good. A key thing is making sure you're buying when the valuation's good, but I think a lot of stocks are trading at some pretty good levels right now. So definitely make sure to scoop up some stocks for the long term if you aren't already. But Tom, what else do we have going on in the market, and what do we need to know?
Yeah, so there actually is some pretty big earnings coming up tomorrow. So tomorrow before open, we will see General Mills and Fuel Cell Energy, or FCEL. Those are two pretty big stocks, but after close, we will see Nike and FedEx. I will say, Mike, I saw a few people talking about Nike today, and I think FedEx will end up being pretty big as well. But heading into the holiday season here, Nike's actually dipping down in the earnings this week. We actually just kind of fell right below that 103 or 104 support. And it looks like we're heading back down to around 100 as of now. So I'm going to really watch those earnings tomorrow after close on Nike. I think that could be a pretty big stock. And another one is obviously FedEx. That's going to be a bigger report, in my opinion, than Nike. And I actually saw some pretty interesting articles today where they're pretty much saying that FedEx is at risk of pretty much having a lot more blunders with their earnings. They said that they're laying more earnings eggs, but I would just call it like blunders, obviously. They actually came out and they announced lower guidance in mid-September. So I will say, watch these FedEx earnings very carefully. They could end up being pretty risky. I feel like this could take a pretty big move in one direction or the other. And I will say I am a little bit worried about it falling back down, Mike. Whenever I look at that daily chart, they've been kind of ripping back up recently and tried to fill that gap, and now they're getting some good momentum back down. So it's not looking too good right now with that overall market falling too.
Yep, so we will see. But Tom, I noticed one stock, Disney, is also tanking down pretty hard today. It's been lingering around a crucial support level right around $90 for quite some time, and it is just breaking down in a major way. What is going on with this stock?
Yeah, this is terrible. So for anybody who doesn't know, Disney is actually associated with the new movie that came out, Avatar, obviously. It looks like that is a Disney movie, obviously. And it looks like that it obviously did not have the best opening weekend. They're saying it was softer than expected. I looked at the numbers, Mike, and it came in fairly close to expectations from what I saw. But overall, it's obviously not good to see that it's missing expectations either way. And I will say, Avatar is a pretty hyped up movie. The first one that came out it pretty much like broke the box office for the first, couple months it was out, obviously. And I know it was very successful on like Blu-ray and everything like that. So it's just another bad thing for Disney, Mike. I know Disney's been moving lower recently, kind of like Amazon, making new lows of the year. And we did actually recently see a big unusual options play on Disney where somebody put $2.9 million into the 80 strike Disney calls. Looks like they did this back on November 23rd, which is at this point is almost a month ago. So looking at the play, Mike, it hasn't been going well so far, but who knows? Maybe Disney will get a bounce back up.
Yep, we will see. I guess the good thing is that these options are in the money, so they're not dead just yet. But let's get into some plays for tomorrow. So one stock I definitely have my eyes on is Meta. So I love this company for the long term, but I'm going to be honest, short term it's looking pretty brutal, like many other big tech stocks. But yeah, like I said, there's a lot of selling pressure with it, a lot of downwards momentum, and at its current pace, it looks like it'll fall a lot more. So it's on my watch list to the downside for tomorrow. It definitely has a lot of downwards momentum. At the same time, though, it's not one of those setups where it's just like you blindly buy put options or you blindly short the stock, because a lot of big tech stocks have tanked down quite a bit over the past week, and we are getting a little bit into that oversold territory.
Yeah, we definitely are. I will say, though, Meta has held up a lot better than most of those tech stocks, Mike. Like, if we look at Meta from the past week, it's been holding up pretty well. You go look at something like Apple, and it looks pretty terrible the past week. So I'm actually pretty proud that Meta has held up like this. But that double top up there does look scary, and I'm kind of with you. It does kind of seem like it might start tumbling back over. Another setup similar to that is kind of like Netflix, in my opinion. It held up a little bit better and is kind of just tumbling over a little bit more. But another one to the downside for me today is actually MGM. And we talked about this a little bit yesterday. I know LVS, MGM, and Wynn had some news related to Macau yesterday where they signed a new agreement. And that seemed like pretty good news. But I will say MGM busted below support today, Mike. They flew below 35 all the way down to around 34 now. And when I look at them on that daily chart, it just looks like they're going to really tumble over after having a pretty good November there. So I'm really going to be watching this one. Obviously, it had a big red candle today, and I'm just going to look for a nice continuation.
Sounds good. Another one that I'm watching for tomorrow is Intel. So INTC. This stock is holding up a little bit better than other tech stocks. And it looks like an okay play for like a dip buy. It is also pretty close to that $26 to like $26.50 support level. So it's on my watch list for like an upside play tomorrow. Intel stock does move a little bit more slowly than other stocks, but still every now and then you do get some pretty good opportunities with this one.
Yeah, you definitely do. I like Intel a lot, and I think this will be a pretty good one come tomorrow morning, Mike. I will say on that 5-minute chart, there's a pretty good like double bottom going on down here, pretty close to like 26.50. So hopefully it keeps holding that, and maybe we'll get a nice play back to the upside. But another one I'm looking at is Boeing, Mike. I will say Boeing had a very nice day today compared to most stocks in the market. They actually closed up green, up 0.53%. And I just figured I'd mention them because it actually had a pretty good day compared to most stocks, even compared to like a lot of the airlines and other stuff like that. But what I will say is they're very high here over the past month. If we do start to see the overall market come back down and Boeing starts to maybe break back below 185 come tomorrow, I will start to look at some puts because it just seems like it's getting a little bit overextended in my eyes. And with the overall market doing bad, as we know, Mike, I mean, let's go back to Boeing in 2020 because, man, Boeing takes some pretty big dips sometimes when the market does pretty bad.
No doubt. All right, well, it's now time for the momentum plays. With the first one, we have Chewy to the downside.
All right, good old CHWY here. Yeah, now that's a terrible move today, down 4.27%. Go ahead and make them break down below $40.50.
Sounds good. With the next one, we have SQ, also to the downside.
Four square here. Go ahead and make them break down below $60 even.
And with the last one, we have good old Apple, but we need both directions.
Yeah, Apple's been going crazy today. I will say it looks like there's a bit of a double bottom here, really close to like 131. So I would say make them break below 131 tomorrow morning if you're playing them down. If you're going to play them back up, make them break out above 133.25.
All right, so we're watching Apple for potential day trade to the upside tomorrow, only if it breaks above the level Tom listed. And we are also watching it for potential day trade to the downside tomorrow, only if it breaks below the level Tom listed. We have that downside level for Square and Chewy as well. So definitely keep those two stocks on your radar as well. But it is now time for the big money trade of the day. We have $1.97 million that went into HAS. So I will say this trade is a little bit advanced, but I'm going to break it down in a nice and easy way. So basically we had $1.97 million flow into the HAS put debit spreads. Essentially, the smart money in this scenario bought the 50 strike put options for February 17th of 2023, and they shorted the 45 strike put options for February 17th of 2023 for a total of basically just under $2 million. Essentially what the trader in this situation wants is for HAS to fall down, and in an ideal world, HAS will fall down to $45 or lower. That is how the trader will make their maximum profit in this scenario. The main thing you need to know is that, they want HAS to fall down. Like I said, ideally to $45 or lower. Looking at the trade, HAS has been in a very consistent downtrend lately, and it's, right at that low of the year. So, it's not a bad setup, Tom.
Yeah, it's really not. I'll tell you, Mike, if HAS ends up breaking below that low of the year there, that is going to be pretty scary. But what a play, Mike. I mean, that's pretty crazy. If they wanted to get down to 45, that would be a pretty big drop. But I could definitely see it happening. Now, let's maybe go out to maybe a longer term, 1 month chart on HAS. Let's see where that is, because it might look a little bit more realistic. And okay, this does make sense. So if we look at it, Mike, $40 to $45 is right around that COVID low. So looks like they might be looking for a retest of that. And with the market doing so bad here, I could possibly see that coming. So watch this play closely, guys. It's a pretty big short. And Mike, it's hard for me to believe that they're shorting a toy company here into the holidays. That's not very Christmas-like of anybody.
Yeah, the market does whack things sometimes, so we will see. If you guys like these hedge fund style trades, make sure to subscribe. When you subscribe, you will see our videos recommended to you more often, and we talk about these types of trades in basically every single video. So make sure to subscribe. Of course, it's completely free, obviously. But Tom, do you have any other last minute things you want to talk about for tomorrow?
Yeah, I will say, guys, be a little bit careful. The market has been falling down a lot because we were overextended to the upside by quite a bit. I will say, though, looking at the 15-minute chart, we've been going pretty much straight down since the market hit 414 last week. So really be careful here. I feel like we're a little bit overextended now to the downside, Mike. Would you kind of agree with that?
I would say that, and I think it really, of course, it depends on each stock. So, for example, if we look at a stock like Tesla, this thing got destroyed over the past couple weeks. So, I definitely think that is overextended to the downside. At the same time, I don't think it's at a point where it's extremely overextended, but I definitely do see that oversold environment with a lot of big market moving tech companies right now.
Yeah, exactly. And especially in the short term, if you look at a 5-day period or something like that, it's pretty crazy. Apple's had almost 5 red days in a row. That doesn't happen very often. Whenever you look at that daily chart, at least not 5 in a row. I see it happen quite often where it goes down, but 5 in a row is pretty rough there. But I will keep my eyes on a lot of these stocks. Apple does look pretty crazy, Mike. Looking at the chart, I did notice that it fell under a very big trend line today. And if the trend line holds up to be true, we might end up seeing Apple fall down quite a bit more here, maybe back down to 125 or even 120 over the next couple of weeks if we get enough selling pressure. But it's looking brutal. Keep your eyes to the downside, but just be a little bit wary. You know, like I said, I'm keeping that thought in my head that the market is a little bit overextended to the downside, but obviously there's a lot of momentum. So kind of like we talked about, Mike, we have the upside and the downside levels kind of like for some of these stocks for tomorrow, and that's going to be a pretty good thing to look at.
You know it. All right. Also, I want to give a giant shout out to today's member of the day, Black Swan Investments in the Stocked Up Discord. You've been in the chat for 3.5 years now, and you're still active. So thanks so much for all you do in the Discord. Huge shout out to Black Swan Investments. Before this week, guys, like Tom just said, we have a lot of stocks, at arguably overextended levels. And we're at a point right now where it's like you have to be careful with some of these bearish plays because it's like, if these stocks just like return to their normal movement, we definitely can see some like, you could say like slightly skewed buying pressure to the upside.
Yeah, you definitely can. And be careful of those housing starts tomorrow morning. I heard that some people were eyeing that data up. Obviously, it's going to be pretty big for the housing market. That could potentially make the SPY move and maybe the market a little bit in pre-market as well. So just be aware of that tomorrow. And, overall, the market has been falling. So I'm not trying to say to just play calls back to the upside now, because there's definitely a lot of momentum down still. But, it's just always good to have that thought in the back of your head that, at any point we could start popping back up. Because like you said, this is just not normal to see us continue down this much. And this is coming off of Powell last week. This is a continuation move down from him, in my opinion.
Yep. Good stuff. Don't forget to subscribe if you're new. We post brand new videos all the time. And when you subscribe, you'll see our videos more often. Besides that, let's have an amazing week.